Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! We had a nice little. Hello, everyone. Welcome back to the Rational Investor. So that's good to see. We had a nice guitar serenade by the Duke of Albuquerque. The Duke of Albuquerque holds political office, and he's a kick-ass guitar player, too. So, anyway, we were having fun before we got the Daily Brief up and running, listening to Neil Young. But might as well do introductions while we're here. How you doing this morning, Kevin?
Doing good, thank you.
Excellent.
Having a good time this morning.
Yeah, we were chit-chatting away, talking a little bit about the Bitcoin break. This reminds me of the Babson break. Anybody who's a stock market historian, tell me when the Babson break happened. That'll be a fun little trivia for you here this morning. As well, we had TRI Options Club meetup yesterday, and it was a bit of a quieter meeting, but it was nice to see our regulars once again last night. And we get to see Shane too, so shout out to you, Shane. I hope you're doing well today, wherever you are. I'm not quite sure where we should begin, other than probably this chart is probably the biggest tell right now. With regard to crypto, we can maybe take a look at the broader market in a moment, but clearly you guys are all very crypto oriented and sort of wondering what's going on here. We were sort of joking before the video got going here that this almost was cliche. Thank you, Andrew. Jeez, you guys are quick on the trivia trigger. In very simplest form, we had basically a full year of down. We should have expected about half of that time period for the up, 50% of that move. I guess that's off of this mark here. If we go 50% roll. That was this event right here. It actually took a week or two longer than this forecast. If this was right on cue, it should have happened on week 26, which would have been there. So pretty close. I mean, within a week, not bad. We then took the low back up to the high, which turns out to be, it was 28 weeks. Half of that would be 14 weeks, which would basically be next week. So, if we just parked ourselves in here over the next week or two, I think Mr. Gann's thesis is validated once again. We don't know whether this is the bottom of this move. My hunch is coming against all these key lows. Probably odds are that this level is going to hold. But, I mean, you never know in this crazy game. If these happen to be the lows, like I said, you just don't know just yet. Ironically enough, and if this pattern plays out, I think actually we should be thinking, ironically enough, I could very easily see the market rally right back up into these levels over the coming 2 months. That wouldn't really surprise. The question ultimately, is this the bottom? And we just don't know just yet. It's a little bit too early. But there's sort of your overall picture of the Bitcoin market. And ironically, I mean, take a screenshot of this. It's quite remarkable how cliche all this is. And try and remember this for future reference going forward. We'll hop back here over to the broader market. Actually, and what I've often found in life is that it's usually the surprises that really come out of nowhere that sort of shocked. And really, I might make the argument that nobody saw, a telephone conversation with a president or prime minister of some Eastern European country being Mr. Trump's ultimate downfall. But I'm actually quite surprised just over the past day or two how the U.S. Democrat-controlled House of Representatives is really ramping up this whole impeachment process for Mr. Trump over these telephone calls with the Ukraine Prime Minister and Mr. Trump wanting to, Ukraine's desperate for military aid, and if I understand correctly, the U.S. was going to give them a whole bunch of weapons and stuff. And if I understand the rhetoric correctly, it was suggested that if the leader of the Ukraine would investigate Mr. Biden and, more importantly, his son's participation in a Ukraine company, and kind of like, can you dig up dirt on these people? I gotta say, I'm actually pretty surprised at how this is really ramped up. I mean, a little bit shocking in my eyes, to be honest with you. I wouldn't have thought that such a minor thing could actually get traction here, but reading through the news articles in this morning, now they're actually going into like impeachment inquiry and all this kind of stuff. It's quite surprising to me. But, this is this crazy world. Usually it's things that just come out of absolutely nowhere that derail the market. And, those who the gods wish to destroy first make drunk with power. What I did notice, now I don't know whether it's political or econs, but we've been sort of talking about this for a while. The weekly chart on the US dollar, we're finally getting up into reload zones. So, we're maybe nearing the end of this counter trend rally. Notice there's this cheeky little gap on the US dollar index right up here at 99.94. So maybe we have to work our way up into that harmonic that I just put on here off the dailies. Maybe that's painting up into that area as well. But US dollar index itself extremely strong here. That in itself, historically, that's actually usually, it's not a market-friendly kind of event. You can see this is a weekly price chart. We talked, and in the free videos and stuff like that, we talked about potential, fractal tops, and then in comes inside bar reversal, and up we go. And also, too, why would the U.S. dollar be moving up? And really, the answer, I think, is that if you're sitting on $1 million in the middle of Botswana or something, and you're deciding, do you want to keep your money in Zimbabwe dollars? Probably not. So if you're going to have your money working somewhere in the world, where are you most likely to want to have it working? And I think the answer is just where the market's going to pay you the most. And sort of to that end, I put out a tweet this morning that really caught my eye. We saw in the 1979, 1980, 1981 fear cycle pivot, the United States cranked short-term interest rates up to just staggering levels. They called it the war on inflation and all that, but in essence, it completely changed the interest rate dynamic of the world, and the whole global economy rolled over into a pretty nasty recession there in 81, 82. The United States was, the best equipped to get through that. So the recession wasn't as bad in the States, but nonetheless it was. So with that said, I thought this was a really interesting article. This one fund manager sort of put together, and I totally agree with this kind of thinking. In that, if we have a situation where the world currencies are falling versus U.S. dollar, that's a situation where people are not getting paid to take the risk of investing in these foreign countries. And it's, just safer to park your money in UST bills, which, and then you get that sort of money multiplier effect. If you're pulling money out of the system, if you're pulling money out of growth proxies around the world and just parking it in T-bills, then that almost acts as sort of like a negative money multiplier effect, and the spiral goes the other direction. And this is a really interesting graphic where it just simply paints when did U.S. short-term interest rates, when were they higher than sort of the rest of the world, and what sort of happened economically following that. So interesting, this person did up a graphic illustrating, on this bottom curve, when the U.S. Rates are higher than the rest of the world, what usually happens, right? And we go up to 100% recession. 100% recession. 100% recession. Got up to like 80% recession. And here we are sitting up at 100% again. So there's not a lot of incentive to have your money working around the rest of the world, really. And that what's crappy about this is that probably in the next few years it's going to be a really, really tough slog. Interestingly enough, for you crypto enthusiasts, right? You've already been through that nightmare for the past year or two, and it hasn't been any fun. And I sort of I warn like you think. Past couple of years in crypto have been bad. Get ready for the rest of the world economy and like the United States, the stock market and all that to basically follow the path that crypto just followed. Don't be surprised here, folks. It's coming. So interesting sort of commentary there on U.S. Interest rates, short-term interest rate policy relative to the rest of the world. We know that the U.S. dollar index itself is sort of a fear, proxy that I'm not comfortable with having my money working around the world, so I'm just going to go park it into U.S. Treasuries. U.S. dollar catching a nice bid here, still with some more bullish upside objectives. And then we sort of tie that in with our sort of cycle thesis that we just went through, sort of the best times for this particular cycle, and that's basically what this rally was. Now we probably have, the better part of a month of poop ahead of us. I ideally would like to try and get more puts off. I'm very cross at myself for not doing my third purchase last Friday. Unfortunately, I can't go in and buy here. I have to wait for some sort of counter trend rally. And actually I think we're probably seeing that sort of come in here now. You can see that we've sort of pivoted here. There is a cheeky little gap up top here that I'd like to see filled in. But, like we've been talking a little bit about the small cap stocks. This is a Russell 2000. Our TRI SOF meeting was relatively short last night, simply because we just didn't have that many new ideas to look at. Small cap stocks. Zach and I are running a penny stock option trading plan. So if the junior stock index is flashing a big sell signal, obviously that means we got to cool our jets. So we won't be doing a heck of a lot on the long side here, just over the short term. We did take we put in some really stinky bids on a on that Riot blockchain that I stock that I have on the books. And interestingly enough, with that guy, yes, he's right down at the bottom end of his range, but it hasn't technically broken down yet. But it does meet our TRI SOF model, in that 50% sitting way up here at $4. So we're interested in buying like really, really cheap $2 call options for the next 6 months. Keep that in mind, right? We're not looking for a turn tomorrow. As I said, because I bought the stock myself, if we do break through this 176 low, I have to liquidate the position. But we came up against key lows here this morning. We're trying to hold these lows. And from the options perspective, buying 6 months of time, throwing $100 at this silly option could be worth a couple bucks just on any kind of gap fill here. And of course, remember, we got the halvening event into early next year. So I'm thinking that TRI SOF trades on this thing aren't a bad idea, but at the same time too, actual outright stock purchases, if crypto just can't find a bottom here, I'm going to liquidate that on that move through that low. So just an FYI there. Risk on, risk off. I thought it was really interesting to see, again, great history lesson for all you guys, great market sort of lesson. Are capital markets manipulated to serve the 1% needs? You tell me. Right? We had this is the oil contract itself, but we had on the USO massive amount of puts. They needed to get the market up to close above, and on USO you can see that level. They had massive, like 100,000 contracts there at $12. So they just had to make sure that into Friday the market was going to close above there. They did, and literally back down she goes. A little bit sad commentary on our capitalist system, but we might as well call a spade and just acknowledge that these markets are pretty heavily manipulated. We have come up against trendline support here. You can see how this crude market is fighting desperately to hold on to these levels. There was a build in crude inventories over this past week. So I did see distillates were down and stuff, but I wouldn't be surprised. This was a little bit beyond bot setups. Just never did rally back 33%. But I wouldn't be surprised if crude had to come back down. You see there's a cheeky little gap. Ooh, there's also one down here as well. I wouldn't be surprised if we had to come back down here. So, again, same sort of thing. Stock market cycle peak, and U.S. dollar very strong. I don't see any reason why over the next few weeks it can't work our way down into these lows on something like oil. But, on balance, what kind of day is it today? The oil continues to work its way lower. Stocks have a very well-defined rolling top. You can see they're trying desperately to hold in here. And again, I thought it was interesting, too, to see that we have another one of these sort of mixed markets. I saw things like Nike and stuff were up, which are, classic, consumer goods. But Dow's up, better part of, well over 0.5%. But NASDAQ is underperforming again. So the S&Ps, you can see they're following along more like the broader market, up about 0.25%. So it feels like maybe the dump that we saw yesterday on all risk assets right across the board might have been abating. I was curious to see, I suppose we can talk a little bit of Bitcoin right here. I was curious to see whether We might have a bottom. Keep in mind GAN level there, 50% rule. Is this the bottom? We don't know just yet. I wouldn't be surprised if we actually oscillate around this 50% level for a little while here. And so to that end, I was very curious to see, here is, of course, yesterday's big calamitous dump. And from what I understand, I think that they're, I don't know whether I tweeted it out or not. No. I think they're blaming, if blame is the right word, accrediting, maybe, the dump in price on there was a wallet that moved I think it was like $1.5 billion in Bitcoin, 1.2. So I think they're blaming the break on the fact that somebody moved $1.2 billion worth of crypto to an exchange and then, of course, just blasted it out. So, I find it fascinating, sort of here is the reason. But, we look at the charts, and one chart that jumped out at me, which I was very impressed with, was we sort of talked a little bit about this. There's that downtrend line that we've been sort of squawking about forever now. Never did get a W on the other side of it. And then I had thrown on this little trend line off of this market structure breakout here. And you notice that basically came just about exactly at the apex of those two events. So, maybe Mr. 1.2 billion in Bitcoin saw this and saw all the M's and stuff like that and saw the fail through trendline support and said, that's it, get me the hell out of here. Tough to say right now. What I did notice, which kind of surprised me, this is an OKCoin chart. If we do A, B, C, D, according to the forwards contracts, they've actually hit this downside objective, but keep in mind, look at these prices. So this OKCoin forwards contract got all the way down to 75.60. But if we look at the cash markets, I notice that we haven't quite hit those downside objectives. This AB equals CD sitting at 79.39. And if I'm not mistaken, Andrew, he said that he had his profit objective just sitting right here. And he was kind of like, they missed me by like 3 freaking sats or something like that. So, if anything, great analogy. It looks to me like you just gotta be patient and disciplined, and you've been patient and disciplined for like 3 or 4 months waiting for this break, Andrew. So just hang in there, bud. I was thinking that maybe we might actually be bottoming this morning. Really interesting. This is what they call an Adam and Eve setup. Use your imagination. I think you can understand why they call it that. Interesting triangle that this reaction, and through this mess, it was interesting while we were sitting in the lounge yesterday. People were talking about the spreads between the various exchanges were just absolutely all over the map, and what the hell's going on, and oh my god, somebody needs to regulate this space, blah 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 blah. In the environment that I've seen in crypto over the past 4 or 5 years, when you get into these fast markets, these exchanges start disconnecting all over the place. And really, that's par for the course as far as I'm concerned in this space. Now, the Adam and Eve would have set up on a move through this 84.63.48. I just put 84.64 here. And notice we also have this cheeky little trend line here just off of these bottoms. Still not confirmed yet, just basically potential. But 1, 2, 3, 4 tests of this trend line. Oh boy, that doesn't look good. Any kind of failure here, any kind of market structure on the other side, that'll actually set up a new sell signal. And of course, that'll wipe out the Adam and Eve thesis. So, Bitcoin was poised on the New York Open there. If it wanted to rally, it could, but you can see it's just sort of floundering right now. And you can see the internals are starting to roll over here. MACD, it looks like, has a new M working. That's never usually a good sign. And the RSI study, Julian's favorite study. I think if you were looking at this, I might do something along the lines of there to there. And there to there. So, we did have this breakout here. Pull back, breakout again. I actually would have thought that the market would have been relatively uppy here. We are sort of sitting at that 50 level. So clearly the market perked its head up above 50 and then put in this very tight little head and shoulders fail here and then lost this trend line. So I don't think we necessarily have new downtrend lines off of these lower time frames working. We're still sort of working off of this bottom. We'll see how this goes. It's kind of no man's land between this trend line now is probably going to act as resistance and this one as support. They're sort of banging around in there. And really that sort of speaks to, do we M out here and fail? Which, Andrew's probably rooting for. Give me my goddamn fill down here, please. And which should, force this thing to go into its profit objective. Or, do we W out here? And I think that sort of marks the low. It feels a little bit too early to declare the bottom. I would only say that I felt confident that a bottom was in if this 84.65 was taken out. But you can see she's struggling here right now. So that's our conversation back to risk on, risk off. The question here is, I did notice euro, of course, we've talked lots about that recently. We should probably be avoiding the euro like the plague. Interesting, Japanese yen came off really hard here this morning. Gold is just getting its ass kicked here this morning, and bonds are coming off. So technically that should be uppy for stocks. It should be uppy for crude. You can see crude's almost, in fact, actually it has tagged this candle wicks high. Still think there's a bit more play in here. And then this debate constantly rages, You can see the bonds, the gold, the yen all coming off here. I would expect stocks and oil to try and firm up here a little bit. We just talked about that oil. Is it ready to go? I'm not quite sure. But I would expect, if Bitcoin is a risk-on asset, and of course this is an ongoing debate, I would expect Bitcoin to catch some sort of bid here, but tough to say right now. All right, so we talked a little bit about broader market. Hopefully everybody can see the fairly well-defined tops here in these are the S&P futures. It does have a fairly well-defined top. Any kind of counter trend rallies up against these wicks, candle body highs, that's when I'll probably be thinking about trying to go and buy one more put. But could we see a dead cat bounce back up into this area up top here on the stock market? It doesn't seem unrealistic to me. All right, so we talked about all of these markets. Algos, not really anything too dramatic. It's interesting how the yen is jumping around here. We did go uber bull, then we quickly have flipped back to uber bear. Actually, this is a really fun conversation here, guys. I posted in the lounge last night, and anybody who's I think I just that was the only place I posted. It was a really cool educational experience. I've told you guys repeatedly that and girls. There is no right or wrong way to trade the market. The right way to trade is just simply what works for you. And what type of trader are you? Are you a range trader? Are you a day trader? Are you a swing trader? And then, really at the end of the day, you just got to sort of figure out what works for you and then just keep doing that same thing over and over and over. Setups come and go, hopefully while you've been here at TRI, we've taught you a few setups that we like, and that I've used over the course of my history in trading. But please, everybody, remember, Brian is a student of the market just like each and every one of you guys. So I'm constantly thinking about new ideas and new approaches, and I was kind of hoping I could find it here. I posted in the lounge last night, but I'm not seeing it. There's a heck of a lot of posts here. Where the heck is it? Oh, well. What's this? I can't find it, darn. Let's see if maybe it's just sitting over here. Darn, what did I do with it? Somebody can find that video that I posted last night. I thought it was a really, really cool setup. And it was just basically a Forex platform. And what I really liked about the video is they walked through the setup very, very closely. Of course, I can't find it when I want to find it. God damn it. It drives me nuts. Maybe somebody can scroll through the lounge. I don't know is there a way to just post, just like search posts that individuals post? Because it was such a cool video. Did anybody find it? Oh, Benjamin, did you find it? Let's see what Benjamin's got here. Where is it? Is this it? Let's see what Benjamin's got for us here. Survey says, yeah, these guys. I was really impressed with this setup. So, I heard somebody on this site, if you don't like L-Tangonators, well, that's fine. I'm not going to be personally insulted. Thank you, Benjamin, for posting that. But somebody posted this morning, I'm absolutely convinced no day traders ever make money, ever. And, I don't know. These guys are publicly touting 95% winning Forex trading formula, beat the market maker. You guys have heard me talk about, gaps are filled 91% of the time. I don't really care what system you use. The only thing I really like is just make darn sure you have 3 unrelated reasons to consider taking a trade. If this works, rock it. It's totally fine by me, but, just please understand, everybody, I'm not here to say that, hey, you got to trade Brian's setup or there's no other setup to trade. I'm constantly learning, and these guys are a really interesting experiment I was running last night. And I sort of saw this on the chart here a second ago, and that's why it sort of came to my memory. Where the Japanese yen, I think, actually just did one of their setups. So do yourself a favor if you're in the market looking for new setups and you're interested in day trading Forex. Benjamin's posted the video there in the lounge. Just give them a listen. It's only, a half-hour video. If it appeals to you, then, again, how many paper trades should we take to convince our subconscious of the validity of any setup? Does anybody know what the number is? Well, I would prefer, Benjamin, that be 20. And of course, Grim wants us to do 100. But I was pretty darn impressed with their little setup. I was practicing it last night, just sort of going through all my currency charts. It's primarily a forex trading system. But basically, he uses a 4 hour chart and then he uses the 15-minute chart to actually time the entries. But it was a really cool system. So I guess the reason why I'm mentioning this, and I think the British Pound it gave one last night. Yeah, I was even posting in the lounge this morning: head and shoulders, knees and toes, knees and toes. So you can see the British Pound's got a very beautiful head and shoulders working. But the key for these guys is they look for this fuck you move, right? You've heard Brian talk about the FU moves, Sebastian FU setups. I think the simplest way for us to identify them is just simply look at your like things like MACD histogram. And if you see that they're going into divergence on pushes to new highs, that's sort of your tell that, okay, get ready. And of course, we look at this and we go, well, Bitcoin, what's a natural retracement of this level, 50% level? So, sitting up here and you see your indicators going into divergence, and I'm not quite sure if RSI put in a signal here. Yeah, you can see the divergence as price is moving to new highs. And then his system, I'll just sort of, in a nutshell, just says look for these off of the 4 hour chart, look for these consolidations, the breakouts on divergence. And of course, if your momentum indicators are overbought, even better. And then the swing failure back below these lows. So in essence, this is a trap, the market maker's trap. So as of this point, you can start going down to your lower time frame charts, 15-minute charts, and start hunting for setups to get you short. And I got to admit, I did a little back testing across a bunch of different assets. The Australian dollar put in just a beautiful one here. So you can see the consolidation, the FU moves to new highs. Momentum is not moving to new highs. Here you can see, I got to change the default of this color here, but here you can see on the RSI just massive bear divergence as price is working its way higher. We have the swing failure of the previous range. This was the market makers getting everybody long. This is the failure stopping them all out and literally starting a new downtrend. So at this point where the red box is, we can start hunting off of the 15-minute charts, shorting opportunities, and off of that 15-minute chart, I sort of dug it apart. There is that red box, and I mean, look at these setups. Jesus Christ. Again, that's that higher time frame 4-hour failure, the swing low. I think there's a guy on YouTube that calls this like the Judas swing, which I find amusing, right? Judas and Jesus references and all that kind of stuff. Here, we should probably put this up here. Sync to all charts. So there is that Judas swing failure, breakout, head fake, lose the lows, stop them out. We're now in a new bear trend. And I mean, look at this setup. I mean, this is ridiculous. So this is that 4-hour failure right here from this swing high down to this swing low, the counter trend rally, back into reload zones. And this one might have been a little, well, actually no, this first one I think I like. So there is that swing, beautiful top. And, interestingly enough, and this guy in this video said this, is you'll see this even on lower time frames. So can you guys see the Judas swing here? So market consolidates, breaks out to the upside, divergence. This is even off of like 15-minute chart. Swing failure, get short. And in this particular case, I just watched this double top because remember, off the 4 hours, we already had the sell signal, so we were just waiting for some sort of structural signal. And I mean, you tell me, that's a pretty damn good trade. So, this, and he also said too that you just keep repeating, hunting for these. So, same sort of thing, breakout to new highs. on Mac, in this case MACD bear div into reload zones. I set up another short. Baboosh. So this is kind of a fun little setup that I'm going to be sort of playing with here in Forex over the next week or two. Just having some fun. Look at all these short setups. I mean, they just keep coming in. He says that you just keep hunting every time the market sets up a short off the 15-minute based on the fact that the 4 hours are still trending lower. And you just keep hitting this thing. Just every time a counter trend rallies off that 15-minute, you just keep hitting it. So it's really, I did see somebody post in the lounge this morning, all day traders lose money, all that kind of stuff. And it's simply not the case. The case here is you have to identify what setup works for you, and you just got to get in there. And I see this repeatedly. And I don't know, like each and every one of you has to go through this learning on your own. I can't force it, but I see repeatedly what ends up happening is people will use a setup for, maybe a month or two, and maybe they get a win or a loss, and then they take like 2, maybe even 3 losses in a row, and they just go, oh, fuck it, this setup doesn't work, on to the next one, oh, it's all a scam. And they don't realize that you're never going to find a setup that's right 100% of the time. You just aren't. Maybe this guy's a 95%. I don't know. But it's just such a good example of, we're not here to tell you, look, you have to trade this one particular setup and that's it. Well, we're here to sort of, the whole purpose of the education program is how do you frame this concept called setups? And how do you frame, tempering your expectations? Even Kevin and I were joking before we... I honestly don't know, Colleen. You maybe have to go and, he calls it his Forex master pattern. So maybe go and watch this video and, I don't know, maybe subscribe to this guy's newsletter service. I don't know if it interests you. I just tried to sort of dissect the pieces. And I'm that type of guy. I like to back engineer setups and just, see if I can visually understand where it is they're going, what they're thinking. But it's just, like all of us should look at this and go, well, gee whiz, Brian, isn't that an El Tangonator? Right? There's the 50% level. Here is your double top, right? Up, down, up, fail, right? So we're going to short that M, and we're going to use the 50% level as our target, basically 2 to 1. Do we have signs of divergence? Yes. Do we have signs that Willie is stupid? Yes. So, the irony of it all is it doesn't really matter what setup you use. I want to keep giving you guys new and different ways to look at the market. And I don't believe that you can't make money from either day trading, position trading, swing trading in the market. I don't believe that. I do believe, though, that what ends up happening with a lot of new people to trading is they start slipping up on the insistence of getting paid when they're right versus minimizing risk when you're wrong. I see that slip up a lot. And then I also see a lot of situations where people take setups, the setup fails, and then they just instantly, based on that one setup failing, this whole setup's garbage, and I'm right back to square one. And, that's fine, but you remember how many paper trades are we supposed to take before we decide whether a setup works or not? Don't give up on a setup if you traded it like 4 or 5 times. Like, that's not setting yourself up for success, because you got to understand that no setup's ever going to work 100% of the time, absolutely guaranteed. It's just, that's not how the world works. So it's a bit of a tangent today, But, just to keep giving you people ideas and different ways to think of the market, I thought I'd mention this today because, Brian's a student of the market. So Brian's constantly searching and learning and trying new things. And I'm open to new ideas. And I'm the type of guy, hey, if it works, I want to know more about it. If it doesn't work, I'm not interested. But the only way you're going to find that out is you got to put the time and effort in to do the back testing. And really, I would argue it's probably better to forward test than back test, because back testing sometimes, like a lot of these technical indicators and stuff will actually change over time, especially if you use things like exponential moving averages. That can actually alter sort of the reality of your setup. So, just be cognizant of that. But anyway, kind of a different tangent I went on today. But just to, give you guys more different things to think about. I'm always open and interested to learning new setups. And this is a very interesting, unique approach to the market. So, something, food for thought. And if anything, what I'll do is I'll take the Altanganator off of this. There are the levels for that Australian dollar top, and all the conversations about divergences and all that kind of stuff, and then how this system would have traded these, and see if you can watch the video, use this as just sort of like a template to sort of see if you can follow along what happened here. I just posted in the lounge, and whether you could identify these trade setups that developed in this Australian dollar overnight. Really cool. So why did I mention all this? I was just quickly going through the sheets there, and of course we talked risk on, risk off, and I happened to look at the Japanese yen here, which was our 4-hour chart, which is sort of that gentleman's sort of preferred time frame reference. And can you see this sort of, they got a bit of a consolidation here and here. They have a false breakout. Let's get rid of that. So they have a false breakout. I suppose the question at this point would be, do we have indicator confirmation that this is a false breakout? I don't know. You guys tell me. Does that kind of look like a divergence in here? To me, it does. Looks like a pretty well-defined top there and momentum as well. So the breakout was a false breakout. We have the swing low that's breaking the bottom. So which direction should I be thinking this thing's going to head now? Hopefully everybody says down. And at this point, and actually I think I have this on over here, the issue with Forex, of course, they do everything backwards, so we're going to be thinking up on this thing. But in essence, there is sort of your Judas swing, there is the divergence, so we actually should be thinking up. So at this point, I'm going to just be watching this this yen here for buying opportunities. So, kind of an interesting conversation there. A little bit different, but, like I said, I'm always learning, always searching, always hunting. I think actually there was a really nice swing failure there, right, which set up this short. That might be too big. I don't know. That's a tough one. But nonetheless, food for thought for you there this morning. Okay, so let's see. We talked about the broader market, sort of my thoughts on the stocks. I am watching this riot very closely here. Basically, we're within about 11 cents of me getting stopped. If I get stopped, I get stopped. That's just the way it goes. Did notice quite a bit. I mean, yesterday was just stunning how much red there was on the screen. So I am noticing a bit of a perk up here. So it, take heart. It wasn't just crypto. It wasn't just Bitcoin. I mean, I saw selling right across the board yesterday. And sort of that kind of risk off kind of thinking. I don't see anything that's overly startling here, other than we mentioned that. Yeah, I mean, I just don't see anything that's worthy of actual trade just at the moment, other than the fact that I might just get stopped out here. Actually, it's interesting. There should be, maybe it's on a different chart, but definitely need to have an alert working off of that level. Oh, weird, I have the line there, but I don't see an alert. Anyway, we'll set that, and if I get blown out, I get blown out. That's the way it goes. All right, so let's go. Maybe we'll wrap this up here. Kind of a different conversation today. I wanted to get short the gold and the bonds and the yen if we got up into reload zones, and politely M'd out. I guess what I'm seeing here now is still not there yet. I mean, the yen's nowhere near there. Bonds, same sort of thing. All these risk-off assets are all pulling back. So, as I sort of said in the free video yesterday, I'm thinking this trade's still probably a week or two away. Yield Bitcoin. Interesting how, the alts just all fell right out of bed there. I think that the alts and the junior stock market are very closely related. And when the junior stock sort of fell out of bed there, so did the altcoin market. This is definitely capital preservation kind of mode. We had a couple trade ideas that we were kicking around with you recently. Another good example where, yes, there was the 50% level. This was a valid El Tangonator, but it just never got there. I mean, it's a trader's life. This is what happens in this game. I do like the idea of applying the bot trading rules to things like El Tangonators. And at the very least, if you can get into a situation where you make sure that a winning trade doesn't turn into a losing trade, hopefully you can see through this dump here yesterday. You should have been stopped out at scratch. That's the way it goes. We might just inside bar reversal here and start working our way back up. And, that's also a good message too, right? I love talking to you guys about Linda Bradford Radke, right? And she would say, I asked her directly one day, I said, if you have a level and you're interested in a trade, how many shots do you give a trade idea before you sort of say, you know what, I was wrong, temper our enthusiasm, strong opinions loosely held, move on to the next trade idea. And she said two. So in a weird sort of way, maybe we took this double bottom, it failed, and then don't lose focus. If you still believe this is a pretty important level, well, let's just keep hunting for W's. Don't lose focus, because the next one might just work and it takes off. It's a trader's life. You just don't know. So, that is sort of the update on this. We did break these lows, so as a result, this setup is done. It's over. This one you should have been stopped out at scratch. The Litecoin, however, this was an outright loss. So we never did get back to even 50% of that range, and we lost the lows convincingly there. And actually, we even lost the lows 2 days ago. So this is a good example of, when the market tells you to get out, maybe it's a good idea just to get the hell out of there, and you wouldn't even be in this mess now. Same sort of thing I said before. If you are thinking that this Litecoin bottom is legit, don't lose focus. Maybe the market politely puts in a W here, and then we go. Could be. But, this is a great analogy that, no setup is ever going to work 100% of the time. Let's see. Anything else we want to talk about? A lot of these, interestingly enough, like some of these names in altcoin land actually just came down and gave people the opportunity to sneak in off the original breakout levels yesterday. Go figure. Wait a minute, I thought everything was going to rad shit. Well, if you were hunting this double bottom, and you were drawing your reload zones. I mean, you just don't know in this game, but you tell me. Original market structure. Basically buying the original W in the reload zone. I mean, there it is. So, again, and I think I've said this a few times today, you just don't know in this crazy game. So, I think whoever was interested in this ORB yesterday and worked bids off of this breakout level, they got an absolute gift there. But you just don't know in this crazy game. So just, get to grips with what actually works for you as a trader. Are you a range trader? Reload zones? Original market structure? Maybe you're interested in being a fuck you trader. Could be. I don't have a problem with it. I'm not going to be insulted. I think I even tell the level oneers, if I used to sit there when I was a broker and say, look at, if a guy calls me up and he says, look at, I use my dog food and how my dog eats his dinner as my buy or sell signal in the stock market, and it works more than like 70% of the time, I'm like, fine. Food lands on the left-hand side of the bowl, that's a buy signal. Food lands on the right-hand side of the bowl, that's a sell signal. If it works more than 70% of the time, I'm interested. But the point here is you just have to figure out what works for you. You have to understand that you are going to take losses in this game. You have to accept that. And you have to just get in there. And, if this kind of system appeals to you, then you have to get in there, paper trade it at least 20 times, 1/10 account size traded 20 times, get 40 or 50 paper trades or, really, really small trades to convince your subconscious of this and to remove all the mistakes. And then, just rinse and repeat. That's a trader's life. So kind of an interesting angle I took today's daily brief, but I hope that was informative for you guys. All right, that's basically the top of the hour, so I think we'll probably wrap it up at that. I'm not overly convinced that we've actually exited the bear just yet. We've done some serious technical damage here to the charts. Especially with something like Bitcoin, I think you got to sort of let this settle down here a little bit. Was kind of hoping that maybe we had some settling down here this morning. I think the jury is still out. And, if I was a guy like Andrew, I would be like, if I was giving Andrew any sort of counsel, I would say, if you've got your levels working, just stick with your levels and don't touch nothing. Because I wouldn't be surprised if this AB equals CD has to get hit down here. And considering that the OKCoin forwards went all the way down to like 75, 60 here, basically the forwards have completed that. But I think the cash market still has to play catch up a little bit here. So, with that said, I feel very, very confident that the price of this is going to oscillate around this 50% level now. And any kind of pushes down against these lows, especially against all these key lows here, this is going to be the move that gets sort of the late people into the market. They're going to go short here, expecting further down, and the market's just going to bitch slap them. So be careful in here. This is not the place to be going short Bitcoin. And ironically enough, kind of like what I showed you here, believe it or not, after this sort of dust settles here, I actually would fully expect us to actually rally right back up, whatever the 50% level is. Right now it's 10,900. My hunch, absolutely without a shadow of a doubt, is we're going to have to kiss these candle body lows from the underside now. But I wouldn't be surprised if Mr. Gann is proved correct again, and over the next couple months we work our way back up to whatever this ultimate 50% rule is. So, okay, I think I'll leave the broadcast at that. I hope you guys got some good value out of my rants here this morning, giving you a couple new ideas to chew on with regard to setups. I do have the Bitcoin price chart on here, so I'm going to be watching. I think you could make the argument. Colleen was asking earlier whether this works on things like Bitcoin. Can you see, Colleen, the fuck you move up here on the divergence over the 4-hour charts? Okay, are you even still here, Colleen? Yeah? Oh, there she is, yeah. So, does this work on Bitcoin as well? I don't know, you tell me. If you move, wash the lows, Judas swing, hunt 15-minute shorts, and just get short and stay short. Yeah, I think it works. So, all right. Have yourselves a great day, everybody. Always a student of the market, always learning. Rinse and repeat. Slow and steady wins the race. Remember what your number one job is to do as a trader here. And PMA for the win. All right, guys. Have yourselves a great day. All the best. And bye for now.